Welcome to the MTA Podcast Series, a weekly audio cast featuring interviews with recognized industry professionals. And your host, Ed Carlson.
Thursday, January 28th, 2010. How often have we heard the claim that the small trader in the futures market is always wrong? We need to examine what we believe about small trader sentiment. Daily sentiment and contrary opinion have a strong place in an analytical and/or proprietary trading approach, but they are not the holy grail solution to trading accuracy and profits. Today's guest, and believe it or not, the source of the preceding quote is Jake Bernstein. Jake Bernstein is an internationally recognized futures analyst, trader, and author. He has written more than 41 books and research studies on futures trading, stock trading, trader psychology, and economic forecasting. Mr. Bernstein is publisher of Jake Bernstein's Weekly Futures Trading Letter, which has been in continuous weekly publication since 1972. He began trading futures and stocks in 1968 and has appeared frequently on radio and television throughout the United States and Canada, including Wall Street Week and CNBC. Jake Bernstein, welcome to the program.
You're making me feel old, Ed.
Sorry about that.
That's all right. Thanks for having me. I much appreciate it.
Oh, we're just delighted to have you join us today. How's the weather in California?
Weather in Santa Cruz today, it's a beautiful day after about 10 straight days of a lot of rain. So we're happy and it looks good.
Oh, that's wonderful. That's wonderful. Listen, there are so many things I want to cover with you today, but as usual, before we get into the Jake Bernstein of today and his opinion on the markets and what he's doing to help himself and others, we usually like to try and dig into a little background on every guest we have. Can you kind of bring us up to date, your history prior to getting into the markets and give us a little background on who is Jake Bernstein?
Sometimes I wonder that myself. And
yeah,
the more I trade, the more I look in the mirror and say, who the heck is Jake Bernstein? My original education was in clinical psychology, and my first job right out of college was working in a mental institution. And so I like to tell people that I work pretty much the same as I did before, except I get paid a whole lot better. The bottom line, I was not educated in trading. I came from a very poor family. I was born in a monastery in Bavaria. Moved to Canada when I was about 3 or 4 years old, and then moved to Chicago. From Chicago, I moved to the California area in California. So I'm entirely self-educated when it comes to trading, and it took me about 15 years to get that way. I started out initially as profitable because someone else was trading for me, but then again I gave it all back, which is the same story that many traders share in common.
Mm-hmm. You say you were born in a monastery. Now that begs some questions. You're going to have to explain that one. What were those monks or nuns doing?
Well, my parents were concentration camp survivors, and so when the camps were liberated, all the hospitals around Munich were full. There was no place to take my parents, who were very ill at the time. My mother weighed about 70 pounds. They took them to a monastery where they met. They got married there, and I was born there. So it's kind of an interesting thing.
That is not interesting. That's fascinating. So you were born, you said, in Bavaria, and how did you make your way to Canada? Is that right?
Yeah, I was born in a place called St. Ottilien, Germany, which is the world headquarters of the Benedictines, out way in the countryside, a beautiful place. My parents were very keen to leave Germany, so my father took a job working for a company in the United States. They put us on a boat. We came over on the boat. They put us on a train in Halifax. When the train got to Montreal, Canada, I was sick, so they kicked us off the train. So we spent a lot of time in Montreal, and eventually ended up in Chicago.
I see. Okay. All right. So then what I guess we don't need the whole story on your childhood. We know that you got educated in clinical psychology, spent a lot of time in a mental institution. What better preparation for trading the market?
Now, wait a minute. Wait, that doesn't sound just right, Ed.
You don't think so?
No, I spent a lot of time in a mental institution as an employee.
Oh, excuse me. Right. I wasn't referring to you. I was referring to the markets as a metaphor for the mental institution. All right. So then, between how did you make the transition from the mental institution to the markets? What happened?
I didn't never know anything about trading or investing. I came from a very poor family. By accident, I was reading the Wall Street Journal one night. I was just bored to death. You got to be bored to read the Wall Street Journal.
Okay.
I see an ad for futures trading. It's a broker running an ad promising to make you a whole lot of money if you trade the egg futures market, and there's a free report. I send it in. Brokers are very persistent, as you know. He starts calling me.
Right.
And he's calling me and calling me, send me $1,000, send me $1,000. $1,000 in those days, 1968, was a lot of money. You could buy a brand new Volkswagen for $1,600. I don't have the money. He tells me to borrow it and to go to doctors who can't speak English to borrow the money, because if I go to anybody else and tell them it's for trading commodities, I won't get the money.
Right.
So I'm searching around. I find some guys who lend me the money. We each put in $333.33, open the account for $1,000. The guy starts making money for me, and he's doing really well. I talked to a friend about it. I say, my $1,000 is now $6,000. The guy says, hey, listen, don't call the broker because you don't want to find out what he's doing. If it's illegal, you don't want to know. If he's doing something good, he's not going to tell you. And third, you don't want to spook him. So I don't call the guy, and he keeps making money. And one day I say, you know what? I'm making $400 a month working at this hospital. He's making $400 a day for me sometimes. So I got to learn how to do this. I call him up. I ask him, tell me how to do it. He says, no, I'm not going to tell you. I said, please tell me. He says, go to the library, read a book. I go to the library, I get a book called Modern Commodity Futures Trading by Gerald Gold. I see something in there I'd never seen before. It's called a chart, and I see trend lines, and the guy says, if you buy at the bottom of the trend line, which is support, it'll go up and it'll hit resistance. Piece of cake. Piece of cake. I called Dan. Hey, Dan, I'm taking over the account. He says, you're crazy. I said, yeah, I read a book. All I got to do is buy support, sell resistance. It's a piece of cake. It's easy. He says, you know what? We understand the egg market. You've noticed all we trade is egg futures because we know the egg market. It's a seasonal market. We know the patterns. Let me keep making money for you. I said, no, you don't understand the concept. I'm taking over. I know how to do this. Besides that, you told me you never finished high school. I got to be smarter than you are. So I'm taking over. Tomorrow we're buying 30 contracts of pork bellies. He says, you're absolutely crazy. You don't want to trade pork bellies. I say, why? He says, the contract is called frozen pork bellies. First rule of commodities, don't trade anything that can't die. Frozen pork bellies are already dead. You'll never make money on them. I buy the bellies. They go down limit for 4 or 5 days. I'm wiped out. He sends me $72, but I had a lot of fun. So, and that's how the whole thing happened.
Vegas without the drinks.
Exactly.
Oh God! All right. I think that's a real good introduction to where we need to get started here. Jake, you are best well known for, is that correct English? You're most well known for your daily sentiment index. I understand you started this way back in 1987. Everybody uses this globally. It is personally, I can tell you, it is absolutely the best sentiment indicator I've found, bar none.
Thank you.
Tell us about how you develop this, what you do with it, how you keep it up. How do you personally use it? And you might even take a moment to compare and contrast what you're doing with it compared to that quote I opened with, your quote, that you said, it's not the Holy Grail.
Well, let me say this. The original idea did not come from me. It came from an associate. He said, hey, you know what? We got to find out what the small trader is doing because the small trader is always wrong. I bought into that popular idea that the small trader is always wrong. So we started surveying small traders, and lo and behold, I find out, you know what? The small trader is not always wrong. The small trader is right a good majority of the time, but the small trader tends to have their largest position and their strongest opinion at important turning points. And they tend to be a leading indicator. But I also found out the small trader can be right, even though they're very bullish, they can be right for a long time before a top happens. So in my work, I use the sentiment as a leading indicator and as what I call a setup. It's simply saying to me, hey, there's a probability of a major low. There's a probability of a major top. Start looking at your technical indicators for confirmation. So if we put bullish sentiment, small traders, 90% bullish or more, that's the time to start looking at your timing triggers, your technical work, and say, do we have a reversal? Do we have momentum divergence? Do we have a trigger? It's got to be with the trigger. And so that's how the whole thing goes together. And I'll just tell you very quickly, it's very similar to one thing that happened to me at the hospital. When I was working at the hospital, one of my jobs was working with children that were very low functioning intellectually. Some of them had IQs in the 70s. We had one kid who was the laughing stock of all the others. They would put a nickel in one of his hands and they'd put a dollar bill in his other hand and they'd say, Mike, which one do you want? He would take the nickel and he'd walk away and they'd laugh and they'd say, you see, Mike's really stupid. One day I have the kid in my office and I say, Mike, I know you're not stupid. You may be low functioning, but you know the difference between a dollar and a nickel. Why do you always take the nickel? Easy. He says, if I took the dollar, they'd stop playing the game. So, the bottom line is the market is pretty much the same for the small trader. If the small trader always lost, they wouldn't play the game. They've got to win sometimes to keep him in the game. So
I love that.
Thank you. So I have found that the small and if you look at a report, for example, Commitment to Traders report, you look at the small trader, you look at the small trader commitments, long or short, in relation to, example, the gold market. Hey, the small trader's been long the gold market for years. They haven't really been net short the gold market. So it's really a question of knowing. And it's not a simple black or white solution like most things in life. The small trader is not always wrong, they're not always right, but you got to know how to use the extremes, because understanding how commitment traders work, understanding how daily sentiment index works, it's all about what you do at the extreme.
Well, I was just going to ask you about the commitment of traders. Are you using it, and can you tell us quickly how do you use it?
I love the Commitment to Traders report, but because of its limitations, namely by the time you get it, it's at least a week old, I don't look at any data except what the commercials are doing. People don't understand that if the commercials are showing as a minus number, that does not mean they're short. If you look at corn market, corn's going up and up and up and up, the commercials number is getting bigger and bigger minus, what does it mean? It simply means they're taking product in from the producer at $2.50 a bushel, they're hedging it at $2.60 a bushel, they're making 10 cents. Their data shows up as a minus on the COT report. It doesn't mean they're short, they're hedged. So if you understand that, for me, the key to using the COT is when the commercials are long the market, that is unusual behavior. You've got to look at the unusual behavior to get your big moves.
Right, looking for extremes.
Looking for extremes, yeah.
Can you, without getting into proprietary information here, can you give us just at least a taste, or as much as you feel comfortable explaining just how you create the daily sentiment index?
When we first started, we actually did a calling survey. People would call in, people would send us faxes, we'd call them. That got to be laborious, and with the advent of internet and instant communication, we do it all now by internet. It's very quick, it's very easy, but I will give you just one clue that is part of our work. We get our best contrary opinion from chat rooms, and that's about as detailed as I'll get into it, except to say you've got to think about who it is that likes to hang out in chat rooms. And once you understand what the personality is, or let's say the insecurity of the person who has time to spend a lot of, who has the time to sit in a chat room, then you kind of understand why chat rooms for us are a very good contrary opinion indicator.
Yeah. We will continue with Jake Bernstein in just a moment, but first a reminder that on next week's program we'll have Dennis Gartman of the Gartman Letter. Jake, tell us what your typical day looks like.
Typical day. I'm up at 4 in the morning. I live in the mountains, so I drive down the scary mountain road about 6 miles, and I'm usually at the gym by 4:30. By 5:15, 5:20, I'm out of the gym. I go to Starbucks, get my hot chocolate, come into the office. Markets open at 6:30, so from 5:30 to 6:30, I take a look at what trades I have for the day. I am not exclusively a day trader. In fact, I really detest day trading. Short-term trades, 3 to 5 days, and intermediate-term trades, about several weeks to a few months, are what I'm best at. I look at my indicators. Everything I do is 100% objective. If it's not 100% objective, it doesn't work for me. I get my orders in, and then I try to do something productive with my life, because sitting here watching the screen all day is not productive for me.
Oh, interesting take from a experienced trader. I know that for you, seasonals are a big deal. You've said that every market has one or two critical months. Mm-hmm. Can you explain to us your use of seasonals, and are you able to integrate that approach with your daily sentiment index?
In some ways, yes, because generally we find that sentiment is going to be most negative at the start of important seasonals. I could give you some examples. When the gold market bottomed seasonally late last year, traders were generally very negative, and that correlated very closely with the turning point in September, October, which is a very typical seasonal. Right now, I'll give you an example. We know that historically the closing price of S&P futures on the 1st of February has been higher 81% of the time than it was, and I can give you the exact date. In fact, I've got it right here in my trading log. That is higher than it was on the close of trading on the 26th of January. I'm sorry, let's start again. 1st of February, 26th of January. But it is not as simple as that. So the bottom line is we know that the average move has been 11 S&P points. So I bought the S&P, and this is a real trade. I bought the S&P on the close of trading the 26th of January. I had a target of 11 S&P points. That target was hit overnight, last night, and today, of course, the market's collapsing, but I don't care. I'm out of that trade. I'm done with it. So that's an example. It's all very focused and very specific, because otherwise what happens to me, Ed, is my emotions begin to affect what I'm doing. I look at the market and I say, I should have got out. Yeah, no, I shouldn't have got out. Why did I get out? What am I going to do? How am I going to get back in? Then it all becomes this great big subjective mess, which always gets me into trouble, which is why I avoid that like the plague.
Jake, you just ruined my next question. I was going to put you on the
go ahead, ask it anyway.
I was going to put you on the spot and throw this back at you. You wrote, "The benefits of learning not to care. You need to learn not to care."
You know my stuff.
Have you already explained that, or is there more to that?
There's a lot more to it. People say, I'm really concerned about my account. I say, you know what? If you're concerned about your account, you've done something wrong. Because as soon as you start getting concerned about your loss, or about how big your profit is, or about what you should have locked in, you have emotional attachment to it. And you can't have emotional attachment. To me, it's like the doctor who cares about whether his patient lives or dies, but if he cares too much, he's going to screw up. And you've got to have what they call in clinical psychology, you have to be clinically dispassionate. And for me, that's the only thing that works. So, in that very famous Jesse Livermore book, Reminiscence of the Stock Market Operator, a guy comes to Jesse Livermore and he says, I'm worried about my position in Union Pacific. I can't sleep at night. What should I do? Jesse Livermore says, sell down to the sleeping level. Right? And it's just like that. That's really what it's all about.
Jake Bernstein, we've got less than 2 minutes left. I've got another quote of yours I'd like to get some comments on. This one really struck a chord in me. Quote, "Many moves are not predictable. They are illusion and not reality."
Correct. If you're trying to predict the unpredictable, it's not going to work for you.
Well, what's predictable and what's not?
There are very few things that are predictable. We know seasonality is predictable. We know that certain chart patterns have predictive validity. I tell people, if you can't test it, don't trade it. I think there's a lot of myth in the market, the myth of the reversal, the key reversal. Put it on a chart. You got computers. Test it. How often do they work? The myth of the 200-day moving average. If you test the 200-day moving average, it's abysmally pathetic. It may make money in the long run, and in the short run, you've got such big drawdown, you're dead. So, there are some things that are predictable. Precious few. It's the needle in the haystack. And I think we have to be careful not to buy into the mythology of the markets. And for me, me, no offense intended, there's certain very popular things that people look at that are completely mythology, and I'm not going to name names, but it's just not right for me. It doesn't work. You know, we have to differentiate between being a good artist, being psychic, and being a good trader. There's some psychics that are really good. There's some people who know how to interpret the market really well. I'm not one of them.
Yeah. Well, I think that is an excellent way to leave today. But before we go, is there anything else you'd like to add?
Yeah, I would like to add this. Sometimes when you become well-known in your field, people like to take shots at you. Some people say, I go to the internet, Jake Bernstein's a scam, Jake Bernstein this, Jake Bernstein that. The bottom line is, get to know Jake Bernstein, see his work, give him an opportunity, because what you'll find on the internet is a lot of people trying to enhance their own reputation in business by squatting on someone's name, by attracting attention to them, and so forth. If people see stuff about me that's bad, hey, it's going to happen when you become well-known. Go to the website where you'll see real testimonials from real people and real traders about me at my website. And that's all I would ask people to do is give me a chance and get to know me.
Boy, that is so true. Unfortunately, that's part of human nature and the human experience, but you're right. You got to give people a shot. All right, then. That wraps up today's MTA podcast. I'm Ed Carlson in Seattle. You can follow me at seattletechnicaladvisors.com or contact me at ed@seattletechnicaladvisors.com. Send us your comments and suggestions. Let's keep our stops tight. Good day.